Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Thanks for watching today's video, traders. We're going to be talking about something that will change how you think about your trading. Just take a second and hit the like button, subscribe, and turn on your notifications. That will help us continuing to make videos. Thank you. Now, recently I've been receiving a lot of emails from traders asking about other times for best trade setups, and if they're not available to trade in some of the main sessions in London, New York, around those 12 candle window times, what are the other optimal trading times that they could be looking at trading? And the number one thing that I always suggest is to be looking at your 4-hour blocks, your 4-hour candle time frames, and looking at that as a 4-hour workday. Now, as you've heard me say before, I trade 1 hour a day, and that's usually around that window. I'm looking for 1 or 2 best trade setups. And today, hopefully, this will help shape some of your thinking around the session that you're trading or the time that you're trading and understanding a couple of key concepts. Explosive moves come out of consolidations. Your availability, depending on the location and the time for trading, may be limited, but understanding the consolidations and the timing will help you identify some of the great best trade setups. Now, specifically speaking around the 3 main windows, Asia, London, and New York, we've talked about the key times of the equity market opens. Now, reshaping that and just looking at some of the important aspects of a 4-hour consolidation. When we have a market that has gone into consolidation for an extended period of time, 4, 6, 8 hours or more, 12, 16, we can see some of these larger moves build up. And over the course of the day, the entire high-low can become one large consolidation, as we see in a lot of cases when we see New York come on board. And in some situations, because of the news that's on the calendar, major news, that can affect how New York is tradable and the volatility. It still may complete the range of that consolidation or a breakout for a breakout trade or a reversal trade, or we may see a market that's in a larger trading range. But these 4-hour blocks can help traders understand the highs and lows of those consolidations heading into their next major session. So we have Asia, 7 p.m. to 9 p.m. New York time. Asia, after Asia, the later part of Asia, between 9 and 1 a.m., can offer traders explosive opportunities heading into the London session. In some cases, they make a high and low, they pull back, and they'll extend the range. When Europe comes on board, traditionally I've spoken about 2 a.m. to 5 a.m. That 4-hour block for currencies starts at 1 a.m. So again, there are opportunities where the market may false break one side of a 4-hour block before reversing and beginning the trade into the London session. And vice versa, we can see the 4-hour false break lock in a higher low and a large reversal happen or a trend trade happen in that Europe-London window. When those 4-hour highs and lows are in consolidation, and that may extend over the Asia window, so we can go US, Asia, London, we can get very large London trades. We can see a US session trade into the end of the session for an extended 6, 8, and into the Asian window for an explosive move in the opposite direction or a trend continuation. The US session can be a 4-hour block between 5 and 9 a.m. So again, we've talked about starting the U.S. window between 8 and 11 a.m. The New York equity sessions open at 9:30, which again, that next 4-hour window, if we have a high and a low established already in London, that's why we will see first-hour trades heading into the U.S. window. They'll jam traders up into the 4-hour peak before reversing and falling away, or vice versa for a long trade. And then when New York comes on board, they'll come back into that, or they'll continue that trend. So these 4-hour highs and lows are where traders can identify huge opportunities, regardless whether they're trading the equity sessions or not. We can see big moves often into the close of the U.S. window, or a continuation where the market may just continue. For example, we could see an all-day fade. The market may just continue to fade for the next 4 hours into that 4-hour close, whether that's a long trade or a short trade. But these 4-hour time frames, when they build a block of volume up at the high or low of the day, we can often see a false break in the next 4-hour window, a pullback, and then a trend trade into the next equity session, into the next 12 candle window. So if you're trading in the gap, these windows often may offer a continuation move, or the market may be locking in a high or a low in that 4-hour gap for the reversal trade. We'll take a look at some of these. So in simple terms, we could have a market that's come down and auctioned lower. It could be in London, it could be in the US. And we can get a new 4-hour window that opens, and they might pop the low, trigger false break, and resume the move. We know there's money up top above the highs and lows. So for example, we know when the 4-hour box is broken, we have 1 hour, 15-minute, hourly, other time frame traders in the markets. We could also just see a market that's trading, that continues to trade before locking in a high in the gap time. Now that high could end up becoming a retest area for a large move down. We can often see this in the London session. We'll see a high of day. They'll put a low in. They'll come back up into the high for a large move down. In some cases, we'll see a continuation trade. We'll see that in Asia often. So we'll see, again, Asia, London, New York for a large move back down. And in some cases, we may see the high actually already in place, and a new 4-hour bar opens and rolls over and breaks out the other side. The big key takeaway that I want you to understand is that each time a new 4-hour cycle starts, we may have a thesis. They may have the high already locked in. We can see this market break down and collapse, pull back and collapse. We can see a market false break, 3 pushes and reverse. We can see an Asian range where we might see the market trade back and open a new 4-hour cycle and go long and break the top. Each time a new 4-hour cycle starts, we potentially may have an opportunity for either a trend trade. We can see large explosive moves. We can see markets coil and explode for measured moves of this high-low distance for fairly lucrative opportunities. Obviously, when we have an equity market that opens inside here, we may already have a thesis where we're locked in, and that equity market may explode for a reversal or a trend trade. Or we may see an opportunity where that market continues to auction higher or lower once it breaks those boundaries. When we have a market, though, that tends to coil in that 4-hour consolidation, we will often see an opportunity, especially if it's at the high or low of the day. If we've come up 3 levels, in most pairs, 75 pips from the previous session, either up or down, will give a good indication that the high or the low may be locked in. And when we start our next 4-hour cycle, we could get a break that now gives us an indication of the direction that we may be going before the market collapses or reverses in the other direction. Same thing goes for the long trades. We'll just take a look at an Asian session reversal that happened on Monday on gold, just to give an example, a basic example. We had a market that closed into the low of the day. In the U.S. session, we auctioned lower and continued that move down. So London had put a high in at the previous week's high, the previous day's high of day, and the market sold off in London and then continued to sell off in the U.S. session. Now we have a market now that's started a new 4-hour block. It's taken out the low of the day as well as the low of the previous 4-hour candle, 4-hour time frame. And then as we head into the end of the session, it goes into consolidation and we get a loss of momentum and the market creeps sideways into the open of the Asian session. We have a market now that's gone into consolidation and sideways, broken structure on the inside, and gave a pin hammer engulfment right into the open of the Asian session for an explosive reversal trade inside of the previous 4-hour block low of day. So again, the market is locked in the low and they've traded back into it for an explosive recoil. Now in the case with gold, oil, and the indexes, they start 1 hour later. So their 4-hour rollover time will be 1 hour later than the currencies. But the point I'm trying to emphasize is that we had a breakout candle on the 4-hour time frame that went into consolidation. We had 3 pushes into a nice tight consolidation rollover and an explosive reversal opportunity in the Asian session. Looking at the euro, we can see the similar trade on the 4-hour high-low. The market traded down in the new 4-hour block, taking out the low of the day as well as the low of the previous 4-hour candle, and then went into consolidation. At the end of the session, we went sideways, again with a loss of momentum in that 25 pip box, and then an explosive reversal trade in the new 4-hour candle that immediately trades back up towards the high of that 4-hour range. If we look at the Monday, we can see that the 4-hour London window put a high in place, and then the next 4-hour bar opened up and traded higher. So trading these on smaller time frames, for example, we may have positioned ourselves for the 4-hour long trade in London, and when the new 4-hour candle comes on board and they break out, we now potentially may be looking for an opportunity that presents or gives evidence of a high or low being locked in heading into the end of that 4-hour window into the US session. For traders who have asked about the gap time trades, obviously if you cycle this 4-hour window in as part of your understanding, we have a market that has made a high of day and then they've exploded higher. We have our high bull candle. Once that's broken and we have the retest, traders trading in the gap time may have been able to position themselves early, the reversal trade back through to the low of the day. Again, we have a market that has made a high and then false broke the high on the new 4-hour bar, broken down and rolled over into our new day and our new 4-hour window, taking out the low of the day as well as the 4-hour range. It's then gone into consolidation and the new 4-hour bar starts and trades back down into the higher low before reversing, giving us an explosive long trade back through the high of the session and the high of the day, targeting are not only our 4-hour block, but the high of the previous day as well. We talked about consolidations offering the opportunities for larger range expansions, high and low of a geometrical range. That 4-hour bar gives us a nice high and low and then a measured target for a breakout trade in that long direction. We can take a look any day and look at the 4-hour windows. We see a market that not only continues to trade higher in the Asian session in a trend trade, but then we continue to trade higher in our new 4-hour block before breaking down underneath of our high bull candles and going into consolidation into the London Open in a new 4-hour block for the reversal stop hunt trade down into higher level longs that were chasing the move. So again, understanding the time frame, the 4-hour changes, and then having our thesis for either a sell or buy trade, trend trade, reversal trade, and using these 4-hour high-low, false breaks, reversals, etc. to understand where our opportunity lies in that trade setup. For traders who are trading in the gap or at different times, again an example of a market that continues to move higher in the new 4-hour window before reversing in the London session, false break, consolidation, and reversal, a high bull engulfed, and then trading back down to the low of the day. We get a new 4-hour block and a break of the low before it engulfs, and new entry for long traders heading into our US session. So again, some traders may have gone long at the low of the day on the engulfment false break in the new 4-hour block, and then traders continue that move in the US window, and we see that continue into the close. So again, this market still continues to auction higher before going into consolidation over the larger time frame. So often if you're trading Asia or London, in many cases there isn't any major news in those session windows. There are obviously major red news events that do happen, but not as frequently as in the US. And so we may see some very clean, crisp opportunities with these 4-hour windows in those London and Asian sessions without having to worry about wicks or volatility. The market just will give us a nice clean trade setup during that session. So again, just coming back to looking at our high and low as one large box, that's a 4-hour consolidation. We see the new session open, and again, same principles. We're down in the lower part of that 3-level box. We have price action above 50, price action below 25. We get our 3 pushes into our Asian session. This is the New Zealand yen for an explosive vertical move. We can look at other examples where traders will get caught trading inside of a consolidation, and we don't see anything violate that 4-hour high-low until later in the US session. Again, an example of where using these high lows can keep us out of garbage markets. These are 15-minute charts, by the way. And another example of where it can get us into ideal best trade setups. We have a market that's broken out in Asia, given us a higher high, which is our break-in structure, and then that market has fallen away in our new 4-hour window, taking out the low of that previous 4-hour box. But it breaks through the low of the day and the low of the previous 4-hour windows to the left and gives us a nice W formation for an explosive 100-pip vertical move. So again, a false break reversal setup at the low of the day and the low of a 4-hour window. So we have a false break on our 4-hour bar. So again, understanding that when these 4-hour time frames are broken and triggered, we have other time frame traders in the market, 4-hour, 1 hour, 15-minute, 5-minute. Everybody's on board. They've broken the low of the day. We may even have low of day traders involved now. And obviously, if they've been triggered into the markets, potentially the target is the high of day because we know that they may have placed stops at those levels. So there are certain best trade setups that we'll give in each session. And again, coming back to just looking at markets that go into consolidation, example of the US session dropping 75 pips from high to low and going sideways into the close into a new day and a new 4-hour block for an explosive reversal trade coming out of a nice tight consolidation. Explosive moves will come out of consolidations. They break the high in the new 4-hour window, trigger 4-hour breakout traders, and immediately that trade reverses and collapses, stopping out traders who may have been triggered in at the break of that 4-hour bar, and then hitting the low of the day, retesting new 4-hour bar inside of the low of that 4-hour candle for an explosive vertical move. When I say a 4-hour workday, I'm actually referring to the 4-hour consolidations in those windows and looking for the best candidates that can offer a best trade setup. If you're trading in these other gap times or at different time frames, understand those 4-hour highs and lows. Those are going to be your best time frame aside from the high and the low of the day, understanding that when those boundaries are broken, that other time frame traders will be in the market, and those are the high probability sniper entry points. Hopefully you got value from today's video, traders. Keep on getting better each and every day. Keep it simple, master the basics, and may the markets go with you.